Hey everybody, Boris Lester PK Force. Welcome to the weekly technicals for November 27th to December 1st of 2017 for the majors for Eurodollar, Dollar Yen, and Pound Dollar. Eurodollar to 120 is the really big question we're all looking at, and a very surprising and a short squeeze move in a essentially holiday week last week that took the euro all the way through the 18 and 19 handles. And I think kind of shows not so much even the euro strength, although there certainly is some strength there, but very much dollar weakness. That's really been the story as we continue. Looking at the levels right now, the euro now certainly is challenging the key 2017 highs into the 120, 120.86's level, with 118 now the key support. Dollar yen held above 1150. We broke the 1150. I'm sorry, we broke the 1150, but we held the 1100 support, which is very, very key. And in some ways, it's going to be, I think, to me, the terminal point here in whether the dollar yen is just a one-way move to the downside or whether this is the hold that actually matters. For now, 111, 113 is the range to dollar yen. And cable, mildly to the upside. We obviously have December 4th, not this week, but the week after that, coming up on the Brexit story. Getting a little bit of a mild bid as both parties seem to be trying to find a modicum of solution. But for now, cable is certainly the laggard as far as the anti-dollar flows go. It's really the flow to the euro that's been driving everything as we go forward. When you look at the calendar, not much on the calendar this week. We have new home sales on the U.S. side, consumer confidence, trade balance, really just zipping nothing. On the U.K. side, mortgage approvals. On the European side, industrial confidence. I mean, this is all such second-tier, third-tier basis. The GDP data on the U.S. side is all revisions, so really not of much material impact. A little bit of housing data as we go forward. And then after that, that's it. We really don't have anything on the U.S. side except we finish up the week with the ISM manufacturing report. That's about it as far as data goes. PCE, probably in many ways something that a lot of people don't look at, but it's going to be a pretty interesting and very important data point for everybody in the marketplace, is the PCE price deflator. This is really the favored measure of the Fed as far as inflation goes. Inflation is the central critical story of why the dollar has been so weak. So market is going to be looking at that very carefully. Remember, the prediction now is just a very tiny 10 basis points on the PCE deflator versus 40 basis points the month prior. Simply because we haven't had any kind of significant wage growth in average hourly wages. So we'll be watching that very carefully. If that comes in at this very tepid numbers, it's going to probably be a challenge to the dollar in many ways and not provide the kind of bump that everybody's looking for in the euro dollar. Let's take a look at the charts though, and just see how well the technical signal has performed. You know, we talked about the idea that there was this big breakout last week or 2 weeks ago. And that sort of signaled that the 1550 was a clear hold, and the euro was now a buy to dip territory. And unless it broke the 1550s, it was a move to the upside, back up to the 120s. Last week really proved that to be very true as we moved very, very nicely closely towards the level. Of course, the 120, 121 level becomes a triple resistance point here. So it's going to be, I think, a much greater challenge for us to clear this level with the kind of power that we cleared the last two levels. If you want to look at, let's take a look at the weekly charts just to see how it is on the weekly charts. It's essentially sort of the same story. Very, very nice, clean 3-week run to the upside, but coming up against this very, very key support. Those of you who want to take just a punt on the idea that this is indeed going to be a double top, it's not a bad idea to want to try to short the euro into these highs with a 21 stop. But the squeeze here certainly could take us beyond this level, and if it does, it could be just a massive roll. I mean, the kind of roll that I think the market is not going to unexpectedly move, where we could roll into the 22s, 23s, maybe even 24s, sort of looking at 125 before the year, and something that nobody expected or anticipated. But on the weeklies, we can see this very nice clear turn that we had 2 or 3 weeks ago that certainly gave us a good inkling that the euro is a buy, not a sell at this point, and it remains pretty much a buy unless we get a stall at these levels. If we can't clear the 120s and we kind of start to fade around these levels, then we're going to have a lower high here, lower double top, and then a move back perhaps down to the 1600s. But for now, the trade is to the upside unless the market prices just show us otherwise. Yen, on the other hand, completely different story. So this is weekly, and it doesn't look nearly as ominous as it does on the dailies. It does look distributive, of course. We certainly distributed around the 114s for quite a while on the weeklies here. But I think if you're going to find a modicum of support here, we can go back on the dailies. The only support you can have is that we held above the 111 for 3 days. 1, 2, 3. We're trading 1150 on Friday to the close. And as long as we hold for another day above 1100, the betting has to become to the upside, meaning that the shorts really couldn't take us down below this level. Next move should be a squeeze to the upside. There's a little fundamental catalyst here. It's really going to be a question of whether we get yields coming up, perhaps maybe trading all the way to 240, maybe a little bit more hawkish Fed rhetoric. It's impossible to figure out what the trigger will be. Maybe there'll be some. This week, of course, is the other big political event in the U.S. is the move back. Congress is back in town. They're going to have to negotiate the tax bill. If there seems to be some material progress on the tax reform bill, and the market gets excited about the prospect that we're going to be looking at some serious tax reductions for corporates, that could provide another burst to the dollar through the 112s. Whatever it is, the longer we hold above the 111s, the stronger the chances are that we go back up above 112s all the way up to the 113s. And then if you look at cable, which was sort of the laggard last week, this is the dailies, right? Much slower, much tighter move to the upside, but still very much nevertheless a move to the upside as we run into the 3350s. 34 becomes a pretty big resist point, of course, and then 34 to 36 is the really big resist point. However, this is the really interesting thing here. The natural assumption, and certainly my assumption, my bias, fundamental bias, is that UK is going to suffer very badly. Brexit is just looming as a serious disaster, and negotiations are not going to succeed. But if there is any positive tonality, if for some reason they do come to some sort of even a modicum of agreement on Brexit terms by December 4th, let's say May makes some compromise. Essentially, if May makes a compromise on the movement, the freedom of movement, which effectively would destroy whatever Brexit political reasons there were in the first place. But if she makes a compromise on that point, the Europeans will then make a compromise on all the trade issues, and that could be very, very, very powerful for pound. So my point here is the natural easy trade is to say, yeah, pound is going to fail and it's going to go to the downside. But the surprising trade here, and one that I wouldn't discount, is some sort of a move towards compromise on both sides that shows that there is potential for a workable deal. And if that's the case, you could have just a huge uninterrupted squeeze all the way up to 136. I guess my point here is short at your own risk on cable, because the political risks here clearly skewed to the upside only because everybody expects the downside to be the default scenario as we go forward. So that's kind of how the week shapes up for the majors. A lot of interesting idiosyncratic stories. Euro has its own story. Dollar yen has its own story. Pound has its own story. And we'll be following all of them, even though that there isn't really much fundamental data to kind of catalyze trade. Wish you guys the best luck, the best of trading. Boris Schlossberg, over and out.